Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on excuse me, Tuesday, April the 3rd, 2018. Taking a look here at the Bitcoin futures contract. Before we get into that, just hope everyone had a wonderful Easter holiday. Monday, which was yesterday, was very thinly traded markets, not too much going on, but we did have a lot of price action, and that normally happens during thinly traded sessions. Markets can have some pretty parabolic moves. It doesn't take much. But if you look here at the weekly chart of the Bitcoin futures, as you can see, the market is diving deeper into the red. Today, the market rallied somewhat, bounced off of that. Let's just pull up the daily chart so you can see that. There's been a lot of news, as a result of these trade tariffs, and of course, talking about the Chinese Yuan gold thing, Petro, whatever. At the end of the day, it's still business as usual. People have been talking about the demise of the U.S. dollar as the world reserve currency. They've been talking about that for decades now, and that has not materialized. So people are going to take this story and capitalize off of it as well. Here's what's happening. On the daily chart, you see the market had a nice bounce, and now this rally is looking to be possibly sold off as we put in another leg lower. And this is going to be the case across the board. As you pull up the Dow futures as well, you will notice that we had that steep decline on Monday, followed by a rally on Tuesday. And now the market is poised to try to make another run up toward the 24,000, maybe 300 mark. But there's a strong possibility that this rally could be sold before it gets to that point as well. It's a fight for momentum right now. All this movement you've seen has been taking place in a very wide trading channel. All right, so you're in a trading range. The top side of the range is 24,435. The bottom of the range is 23,306. So you got about 1,000-point trading range that the Dow is stuck in. So you crash one day, rally the next day, crash, rally, crash, rally. It's just repeating the same pattern. But for those of you that are subscribers to the weekly pulse wave price triggers, you know that this market is in a stage 2 pulse wave channel trend. And what this means is when you enter in a stage 2 pulse wave, you are now in a actually well-developed trend. All right, and that trend is a bear market on the daily chart. You got your trend lines and prices and momentum lines all below the Kumo cloud. That is a bear market. All right, this market is mature now. You're in a stage 2 pulse wave. That is a big deal. If the market does break out of this trading range, that means that the run will be quite substantial or massive. It will be either to the breakout to the top side or the bottom side. Whichever way it goes is going to be massive. The longer we trade in this sideways pattern within the bear market. All right, just understand that. Taking a look at the NASDAQ 100. All right, a little bit different. This is not in a stage 2 bear market on the daily chart. This is still in the stage 1 pulse wave bear market, as the bull market is extending into a deeper correction. So you've passed now the correction mode on the bull market side, and now you've actually entered into bear territory. Trend lines have not yet dropped below the Kumo cloud. So this one has more of a downside to go if it does go that way. You have not yet formed the base to try to rally and bounce from. This one is still in a decline with momentum picking up to the downside on the daily chart. Flipping over to the weekly chart, you can see same thing. Momentum starting to pick up. And this week is going to be a pivotal week because the momentum line crosses down is going to really accelerate down, push down on the price. Yeah, we got rampage coming up, but if price declines below the Kumo cloud before then, you're looking at, again, the beginning stages of a possible bear market. We're not there yet. All right, the complexion is barely hanging on to a bullish one, but right now it is looking very bearish indeed as far as momentum is concerned. Momentum on the weekly chart is starting to pick up to the downside. Looking at gold, gold is still in that trading range, hasn't broken out yet. Complexion is still bullish, but not quite mature yet because the trend line is not popped top side of the Kumo cloud. Once price and trend lines are all above the Kumo cloud, then yeah, you're in a mature bull market at that point. A lot of fingers are being crossed, hoping that that materializes. Taking a look at silver. Silver looks sort of like the gold chart, but in reverse. Everything's happening below the Kumo cloud, price action, and your trend lines. Therefore, this one is consolidated on the sideways side of things, and it is in a bear market. So if it does have a rally, it's in danger of being sold heavily. So silver right now is not looking good at all. It's not rallying and it's not crashing. It's just consolidating below the Kumo cloud on the weekly chart. So this one is anyone's guess of how much longer this thing can continue. On the daily chart, same thing. Everything is below the Kumo cloud. All right. You're bearish the cloud on the weekly and the daily on the silver. Looking at the crude oil. All right, on the weekly chart, crude oil complexion is still a bullish one, and it's looking to break out of this sideways channel, and it wants to break out to the top side. So this one's still on pace to break $70 a barrel, and we're getting closer to the driving season, so I think this one is definitely in play to watch. Okay, looking next at natural gas. Now that we're getting closer to the summer driving season, you can see here as we have transitioned from winter into spring that the demand for natural gas in the United States has gone way down. Hence, everything here is below the Kumo cloud, and the market is bearish on the weekly chart. So it's officially a bear market, and any kind of rally that would ensue would be short and temporary, and most likely be sold just like we did back in here. All right, so as it stands, nat gas is in the bear market. One thing to note on the commodity side of things is that there's just a glut of it everywhere in storage. So you're not going to see too much of any kind of real substantial bull markets unless there's some type of demand story. All right, so supply and demand is just going to keep most of these commodities bearish for the time being. All right, taking a look here now at the bond market. All right, we're going to look at the bearish bond market. All right, so once again, price action, everything, trend lines, all below the Kumo cloud. Market has been in a bullish bounce off of the new lows and now hitting resistance around the 147 handle. Question will be, will it gather enough power to punch through and make a real run back up toward the 150 resistance? Or is this the end of the rally and bears are going to enter and push prices back down again? That is the question. It looks like the bears are probably going to have their way. So this is an interesting development here with the bonds. And last but not least, let's take a look at the US dollar index. All right, so the US dollar index tried to rally off of its lows and did pretty good. We got up toward the almost the mid 90s. We're at 90.17 now, but get up to the 90 handle. And like I said, it's going to oscillate between 89 91, and that's exactly where it is. It's dead center now and probably going to chill around this area. We got overhead resistance around the 90.76 handle, so I don't really see a big story here to make the dollar really do anything at this point, except for stay within that range that the Trump White House needs it to remain at. All right, let's see if it's all good in the hood. Let's take a look at Hack. All right, so Hack hit that 36, just like I said it would, and since it has retreated. This chart is looking similar to the NASDAQ chart. What the exception is, you got support bouncing off the trend line here. So this is a pretty, good sign for the bullish argument. And you got mad rampage coming up. So I guess it's safe to say that the world is not out of the woods yet, because once again, Hack is in a bull market. Trend lines, price action, everything is above the Kumo cloud. That is a bull market. All right, so that's what we are right now, folks. Basically, the markets on Monday, because everybody was still on holiday in Europe, markets decided they were going to sell off. Then today, there was a somewhat correction of that. But just remember what I said as far as the bearish sentiment starting to creep in. As far as the algos are concerned, we're in the stage 2 bear market in the Dow. So stage 2 pulse wave, negative pulse wave, it is what it is, folks. Let's see if it matures to a stage 3. We'll keep an eye on these things, and we'll take what we can get when we get them. The price triggers have been killing it like they always do. Nice play off of the bond bounce. We had that nice play on the bond bounce, and now we're going to sidelines until tomorrow morning to see what else is on the table. If that's going to be the end of the bond rally, then we'll look to get back short again. Likewise, looking at shorting on that NASDAQ. That short played very nicely for us last week. So this is a new week, kind of a shortened week, even though Monday wasn't an official holiday here in the States. It was a pseudo holiday here in the States because the volume was very light. All right, so keep your eyes and ears open. PulseWaveTrading.com. Come learn how to trade these markets, learn how to read these algorithms, get the free study course with your purchase of the weekly Pulse Wave price trigger subscription, along with a ton of other goodies to teach you how to benefit from what's happening in these markets. And with that being said, remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. Peace.